All right, welcome. In this explainer, we are diving headfirst into one of the most powerful and honestly most misunderstood forces in the entire global economy, modern investment banking. We're going to strip away the jargon, get rid of the complexity, and just break it all down. Let's get right into it. So you ever see those crazy headlines, right? A multi-billion-dollar merger, some hot new tech companies suddenly going public? And you just kind of wonder, wait, how does that actually happen? Who are the people behind the curtain pulling the levers on these massive deals? Well, the answer almost always comes down to investment banks. At its absolute core, you can think of an investment bank as a kind of high-stakes financial matchmaker. Seriously, they are the critical bridge connecting the huge corporations and even governments that need staggering amounts of cash with the investors who have that capital ready to go. They make the world's biggest deals possible.
Okay, and first things first, we've got to get this distinction crystal clear. The bank where you have your checking account, that's a commercial bank. They're all about your deposits, my mortgage, that kind of thing. An investment bank, it's a whole different universe. They don't do consumer banking at all. Their entire world revolves around these giant complex transactions for the biggest players out there.
So, what do these banks actually do all day? Well, they have this whole suite of super specialized services. You can really think of it as a financial toolkit for corporations. And we're going to break down the two most important tools in that entire kit.
The first, and maybe the most fundamental service, is underwriting. This is the bedrock of raising capital. So imagine a company needs to raise, say, $1 billion. The investment bank comes in and basically says, don't worry, we guarantee you'll get that billion. And how do they do that? They literally buy all the new shares from the company themselves and then take on all the risk of selling them to the public. It's an incredible high-stakes promise.
And the classic example of underwriting in action, that's the initial public offering, the IPO. This is that whole magical process of taking a private company public. The banks start with insane due diligence, checking every single number in detail. Then they go on this thing called a roadshow, flying around the world, pitching the company to huge investors to build up hype. Based on all that interest, they set the final price, and boom, the company's stock starts trading for everyone to buy.
Now, the other massive pillar of investment banking is mergers and acquisitions. You'll always hear it called M&A. This is the strategic advisory side of the house. Anytime you hear about one giant company buying another, like Microsoft snapping up Activision, there are teams of investment bankers in the background advising on every single move to get the best deal done.
And putting together an M&A deal, it's like a grand master level chess match. It all starts with strategy. What's the goal? Who's the perfect target? Then comes the really intense math, the valuation, figuring out what a company is actually worth. The negotiation is where bankers really prove their value, fighting for every last term. Then more due diligence to make sure there are no skeletons in the closet. And finally, closing the deal. They are the architects from start to finish.
Okay, so we know what they do, but let's pull back the curtain and look inside the bank itself. How are these places even organized, and who are the people making all this happen? Well, most banks are broken down into three main parts. You've got the front office. These are the people you probably picture, the M&A bankers, the traders, the ones bringing in the revenue. But they can't do anything without the middle office, which is all about managing risk and making sure they're following the rules. And holding it all together is the back office, the engine room handling all the tech, operations, and accounting. All three are absolutely critical.
And the career path, especially in the front office, it's famously rigid. You start as an analyst, just buried in spreadsheets, building financial models. Survive that, and you become an associate, kind of like a project manager. As a vice president or VP, you start actually managing the clients. And then, way up at the top, you have the managing directors. These are the rainmakers. Their entire job is to bring in those massive, headline-grabbing deals.
Okay, this all sounds really important and probably really expensive. So how does this all translate into profit? I mean, where do the billions of dollars actually come from? Let's follow the money.
So remember that IPO we talked about? For managing the whole process,
a bank charges a fee, often called a spread, that's usually between 4 and 7% of the total money raised. So on a billion-dollar IPO, a 7% fee is a $70 million paycheck for the banks, just for that one deal.
And those underwriting fees are just one slice of the pie. Banks make huge advisory fees on M&A deals, they generate income from trading stocks and bonds for clients, and they collect fees for managing huge investment portfolios. It's these diverse, fee-based businesses that are really the lifeblood of a modern investment bank. So we've seen how they work, we've seen how they make money, but big picture, why should any of us care? What is their actual role in the economy? Well, their impact is probably way bigger than you think. This quote really just nails it. Investment banks are the engine of the whole system. They are the ones who connect all the world's savings, from your pension fund, from mutual funds, with the companies and governments who use that money to build, to invent, and to grow.
Think about it this way. Without them, it would be so much harder for that amazing tech startup to get the cash it needs to grow up, or for a city to finance a new airport. They make the M&A deals that literally reshape industries, and in doing that, they help move money to where it can be used most effectively anywhere in the world.
And one last thing that's really important to know, the industry isn't just one big thing. You have the bulge bracket firms. These are the household names, right? The Goldman Sachs, the JP Morgans of the world that do absolutely everything. But then you also have these specialized boutique firms that might only do M&A advice. Both of them play a really crucial role in the ecosystem.
So in the end, there's no denying it. Investment banks are pretty much the indispensable architects of our modern financial world. They're the engine that channels money and makes massive growth possible. But all that power leaves us with one pretty critical question to think about. What happens when that engine starts to run too hot?